Hi, this is Julie with Julie Lam Insurance and Financial Services, and I want to talk to you tonight about mortgage insurance. What is mortgage insurance? Mortgage insurance is a type of life insurance. That's all. It's pretty simple, but it is packaged a little bit different than your regular term insurance. And what it does is it covers you for a very particular amount of time. It's very good to have term insurance when you have loans. So let's take Jane and Bill. Jane and Bill buy a new home, and they don't have to both be on the mortgage necessarily, but Bill wants to make sure that if anything happens to him and he doesn't come home one night from work, that Jane, did I say Jane? I hope so. Well, Jane is going to receive a check for the full amount of that loan. The check goes directly to Jane, and she gets to go and pay that mortgage off, and her mortgage is paid off. Now, could Jane do what she wants with that money? Actually, she could. She could decide to pay off a chunk of that mortgage and perhaps bring her payment down and do what she needs to with the rest. But usually it's allocated, especially for the mortgage, and Bill would have extra coverage to make sure that his income was protected as well for Jane. Now, mortgage insurance is pretty nice because it comes with special bells and whistles, such as, let's say your loan was $250,000 a 30-year. So Bill and Jane take out $250,000 mortgage insurance on each other. Now, if after 30 years Bill and Jane are still living, they can actually receive a full refund of the money paid in. So that's kind of nice. So if anything happened to either of them, the other receives a check tax-free for $250,000, and if nothing happens, they get all their money back. That's what I really love about mortgage insurance. Also, it has other little special bells and whistles that you can put with it. You can cover the kids for very, very cheap. You can also add disability, which means, let's just say, I don't know, things can happen where maybe Bill needs to have a surgery and he's going to be out of work for a couple months or more to recover from the surgery. Disability will help him pay that mortgage if his work doesn't cover that time off. So that's nice too. It's especially built for new homeowners or homeowners. Even if you're not a new homeowner, oh my goodness, that bird is loud. Even if you're not a new homeowner, you can still have mortgage insurance. Now, does everybody qualify for it? No, they don't. It is still based off health and age and things like that. But most people that I have done mortgage insurance for do qualify. And even if you don't qualify for mortgage insurance and you're between the ages of 40 and 85, I still have something that we do that really helps the spouse in time of need to make sure that there's enough money there so that they would even have time to sell if they were going to move in with family and go somewhere else. They don't, lose the home to foreclosure if there's not enough money there. So there's lots of different ways. If you want to know more about mortgage insurance and you'd like to find out how much it would be for you and your partner, or just, you don't have to have a partner. You can own a home by yourself, obviously, and you can still have mortgage insurance, and many of my single parents do, and they have either their parents as the beneficiaries, sometimes their children, but for the most part we don't make children beneficiaries until they're the age of 18, because it doesn't go directly to them if they're not 18 or older. All right, well, call me if you have any questions. I'm happy to answer them all, okay? You can email me with the email address, or you can call, and my number is 727-386-9455. That's the office. My cell phone is 916-747-5494. Find out about mortgage insurance and what it would take to protect your family.